Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on in the stock market today? Well, the Dow, it's up about 300 points, but the Nasdaq's flat. Now, why is the Nasdaq flat? Well, Google and Microsoft, they just came out with earnings and they both missed, so that's holding the Nasdaq back. But the Dow's still up 300 points. S&P is up, but the Nasdaq is kind of flat today. This market, though, is not coming in the way I expect. Now today, everything is sitting right at the 50-day moving average, right? The SPY came right up to that 50-day moving average. Now the VIX came down to its 50-day moving average. The HYG, which is the junk bonds, came up to its 50-day moving average, and the dollar came down to the 50-day moving average. You have all of these sitting right on the 50-day moving average. Now, we've had this run up, and it's been strong the last 4 days. Wow, boom, 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 up, 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 right? The run-up's been strong. Now, just off of the lows that we made earlier this month, I mean, we're already 10% off of those lows. Now, my thinking is it might be a good time to take a shot on the short side of the market. Now, I put a small short position on the SPY today. We'll see how that plays out. It's trading around 387, and I got a short position on it, and it's small. I'm not real enthusiastic about the trade, but I do see that the downward slope is still in play. The bears are still in charge of this market. Now, if we get another 10% rally from here, well, it's going to switch to the bulls, but I think the bears are going to start to pounce on this market again and send it lower. That's just my take on the market. Let's move over to the real estate market. Now, Redfin came out with an article that September was the biggest decline in home sales on record, the biggest decline ever. And well, that makes sense because we had this big run up and now we got this big decline starting, right? Okay, 62,000 homes fell out of escrow in September. Now, that's interesting. That's a lot, right? 62,000 people went into escrow and they fell apart. They didn't close. They backed out of the deal for whatever the reason is. Obviously, the biggest reason is that increase in interest rates. Okay, well, the affordability factor of people being able to afford a home has never been at a lower rate. Anyways, the lowest rate in history right now of people that can afford a home. Now, why is this? Well, rates went from 3% to 7%, but the prices haven't really come down much, maybe about 10%, but that mortgage rate, it doubled, so it makes homes very unaffordable. Now, this unaffordability we have is pretty much a byproduct of the Federal Reserve, of them keeping interest rates artificially low for the last, well, basically 15 years. And then, of course, they've been buying the mortgage-backed securities. We all know about that, the $3 trillion they buy to subsidize the mortgage market. But a lot of people think that the home prices are, no, the unaffordability is because of the interest rates going up. Now, let's take a look back. Okay, now, obviously, I'm an older gentleman, and the first home I paid right around $100,000 for it, right? $100,000, and I got a mortgage, I'm using rough numbers now, for about 12%, right? 12%, $100,000. My mortgage payment was about $1,000 a month. Now, if you go and look at that exact same home today is selling for over $1 million, right? So anyways, your property taxes, if you were to buy that home today, would be more than my mortgage payment was back then. And my interest rate was 12%. So just interest rates alone are not totally to blame for this affordability factor. Now, something's going to change. Now, here's what's going to happen. Okay, now it's possible, okay, we see the mortgage rates have doubled, right? So it makes the unaffordability way low. Now, it's possible that your wages are going to double. Do you believe that? I do not believe that. I don't think your wages are going to double. Okay, so that's probably not going to happen. Now, it's possible that they reduce interest rates back to zero again. Now, that's a possibility, and that would make homes more affordable. I do not believe that's going to happen. Now, what do I believe that's going to happen? I believe that the prices are going to come down. Now, eventually the sellers are going to realize if they want to sell their home, they have to be able to have someone afford to buy the home. All right, so let's just take a look at how this is. All right, people say that no one's going to sell because everybody's got a 3% mortgage right now. So there's no problem. Houses are going to stay up, right? Well, I don't think that's actually true. I think that some people have to sell. Some people, they just have to sell. And I always use the example of a divorcing couple. They have to sell the house. It's court ordered, right? Someone gets relocated to another job. They have to sell. Now, when that person has to sell and there's no buyers, the buyers cannot afford to buy, they have to drop the price down to where the buyers can afford to buy. Okay, so those are called comps. Now, granted, in your area, let's say your homes were all at $1 million. No one would sell for less than $1 million, right? Okay, but in a lot of areas, some people have to sell. And so the $1 million price, it may come down as much. I call it 50%, right? When people have to get out, they have to sell. They have to get out. And the prices come down to whatever level that is. Now, Billy Bob, he got out at the $1 million. The next person maybe 900,000, the next one maybe 800,000, but as they come down, that is the new comp for the neighborhood. And to get above that comp, it's very difficult because then the home will not appraise at the higher rate. So even though you're at that $1 million locked in with that 3%, well, when they come down to, let's say, 700,000, you may not want to pay on your mortgage because your mortgage is probably 900,000, right? So when your next door neighbor is selling his house for 700,000 and yours is 900,000, you might just tell the bank, well, I'm not paying my mortgage. House isn't worth it. So what happens? Well, give it back to the bank. The bank then puts that one on. Now, where do they put it on? 700,000. Well, that was the last sale. Maybe it goes on at 650 or 600,000. So the prices have started to come down, right? All right. Now, here's the thing. Now, a lot of people aren't talking about this part of real estate, and I'm not even fond of talking about it myself. It's about the baby boomers. You see, a lot of the baby boomers, well, they all own houses, right? The boomers, they got the houses. The millennials, they want the houses, but they can't afford them, right? Because the baby boomer has in there way up here when they go to sell. Now, the baby boomer generation is starting to move into old folks' homes, retirement communities. Now, I'm on the younger side of the baby boomers, but eventually I'll be headed in that direction. Some baby boomers, they're starting to die off, okay? And those houses come up for sale, all right? And they're going to put the inventory onto the marketplace. But here's what people don't look at. Okay, so baby boomers, now I'm getting calls for this right now. I'm getting calls from people that want to sell their property. They're thinking about selling. They're getting to retire. They're getting ready to move into, well, a retirement community, and they're going to put their house on the market for sale. Now, here's the thing with baby boomers that a lot of people don't know. A lot of baby boomers do not have money to retire. They just don't have money to retire. All their money is in their house. Their house is their number one asset. Now, Northwestern Mutual, they just came out with this, well, their opinion is that you need over $1 million to retire comfortably. So baby boomers, they don't have over $1 million. Most of them have saved, well, maybe $100,000. All right, so they're $900,000 short. So where are they going to come up with the money? They're going to come up with the money by selling their property, by selling their house. So when because they're ready to go, they're ready to move into a retirement community. In my area, I live in the Bay Area in California. A lot of them are going to move out of the area to more affordable places because they can't afford to retire here. So they're going to move to, well, one gets going to Georgia and others going to Cleveland. I mean, they're moving in different areas. These are just the calls that I'm getting now, right? They want to know, well, Mike, how much can I sell my house for? Because I need that money to go retire retire with. Okay, so they're going to sell their house and they're going to retire. So most baby boomers have most of their wealth tied up in their house. Now, as prices start to go down, okay, it's going to force these people to sell sooner than they want because they can't risk losing their retirement funds. Their retirement funds are in the house, right? So it's kind of this race to the bottom. Okay, it's the race to the bottom. It's the race to see who gets out first because they need that money out so that they can go retire comfortably. Now, if they wait too long, the price will come down and they won't have enough money to retire comfortably, so their retirement will be much less. So a lot of baby boomers are getting very nervous about getting the money out of their house so that they can retire. Now, the millennials, they're going to come in and they're going to be the buyers of these properties. They're going to be the ones that are buying them. So the prices, as they come down, the millennials will start to be able to afford to buy the houses from the boomers. Now, millennials, most of them are not saving money at a very impressive rate. As a matter of fact, over 50% of them have zero money saved up. Now, thank goodness, you can buy a house with 5% down and you can start to save money. But if you're a millennial, I would say to start to save up some cash so that you can buy these properties that the boomers are going to be dumping onto the marketplace. And it's going to be like a tidal wave of inventory coming onto the marketplace. Now, I know in your area, there's no old people live there. No one over the age of 65 lives in your area, so you don't have to worry about the inventory coming onto the market, and that inventory is going to depress the house prices. Now, this is just how it's going to play out. There's a lot of things that are in play right now. Okay, that's just one way that the inventory is coming on. The biggest way is going to be the foreclosures that are happening, already starting to happen. It's spiking up now, I'm telling you. It's spiking. People are going out and getting these HELOC loans, and anyways, they can't even make the payment on them. The reason they have to get the home equity line of credit is so they can continue to live. But as the prices come down, there's no equity in their home to refinance that HELOC loan, and now they're going into foreclosure. A lot of foreclosures are going to be piling onto the marketplace. We haven't even started the layoffs yet. The recession's here. The layoffs are being announced, but they're not in effect yet. And once people get laid off, those people are going to have to sell their properties also. And I'm talking about millions of people are going to get laid off in this recession that we're in. Shh, don't tell anyone we're actually in it, but it's coming, they say, next year. That, they say the recession's coming. We're not in it yet. Shh, can't say that word. But we are in it. And anyways, so there's going to be this tidal wave of inventory flooding the market. This time next year, we're going to be talking about a glut of properties. We're going to be talking about prices that are 20 to 30% lower than they are now. And they're still going to be heading down even 12 months from now, because that's not where they bottom out. Remember, we talked in the last video, they bottom out when the people that get unemployed, the unemployment number goes up so high when that number starts to go back down. But right now it's just starting to go up. We're in the first or second inning. Sit back, be patient if you don't have to buy, and just watch the prices come in. You're winning if you're not buying. I'm telling you. Look, I'm a real estate broker, full disclosure there, and I'm supposed to tell you that now is a great time to buy. It's really not. Don't tell anyone though. That's our secret. Me and you. If you like this stuff, give me the thumbs up. You really like it, punch the subscribe button. I got some good stuff coming up you don't want to miss. I'm Tall Mike. Get out there, everybody. Have a great day. Bye-bye now.